Nick, welcome to Equity Mates.
Thank you very much. Great to be talking to you guys again.
Yes, great to have you back on. Now, we're here to talk about Rightmove, but before we dig into that specifically, REA gets a great rap here in Australia, and you guys are looking around the world globally at businesses like REA. So, what are some of your observations about these real estate portals globally? What characteristics make them so attractive?
Yeah, that's a really good question. So I think the first observation here is that in the developed world, we actually can't find any examples outside of two, which I'll speak to in a moment, where the number one property portal has ever been supplanted by the number two. So the equivalent of Domain overtaking REA in traffic and inventory numbers and becoming the number one property portal. The only two places where we've sort of seen that is in Russia, and I think we can put a swift line through Russia. And the other spot's regional France, where there's a sort of horizontal marketplace that came in, but not in the major cities. So the first port of call is that these are widely considered, and I think quite rightly, to be almost like the old newspaper models. Essentially, that's what they've become. Right? They're the old classifieds pages of a regional monopoly, which was an old newspaper, and they've really stripped out the property section of that. And there's very good reasons for why these businesses become sort of duopolies, but a very distant second in most markets. So that would be the first observation about the market generally. It's a very attractive one around the world.
Wow.
Do you attribute that phenomenon to just like really strong like network effects that like once the platform becomes so valuable, it's so much more valuable than anything that comes after it?
Yeah, 100%. And you can kind of think of the consumer behavior here where it's normally for 99% of people, your house is going to be your most valuable asset. And you go down to your local real estate agent and you say, look, I'm looking to sell my house. And he says to you, well, we're not going to use realestate.com. And you say, well, you're fired. I'm going to go to the next bloke because we know that's where all the eyeballs are. That's where all the potential buyers are. And so that virtual circle just becomes stronger and stronger as it does for all these network businesses where more inventory attracts more eyeballs and so on and so forth, and that compounds out over a long period of time. So nothing too revolutionary in that statement, but just a reminder of how powerful these network effects can be.
Well, that is a good segue to Rightmove, because I think for a lot of people, the first we heard of the company, well, for Aussie investors at least, the first we heard of the company was when REA was thinking about a takeover. But you guys had been investing in Rightmove before then. Everything you just said there about how powerful these number one players are, Rightmove was a bit unloved in the British market and perhaps wasn't seen as a market darling in the same way that REA was, despite all of those observations you made earlier. So tell us a little bit about how you came to invest in Rightmove and what made it compelling for you.
Yeah, well, it's a good point. It certainly didn't attract the same valuation as REA did in the Australian market. And I think part of that's to do with the fact that the Aussie market is bereft of a high number of high quality businesses. It does have some high quality businesses here, REA being one of them, but those companies tend to get bid up to pretty unsustainable multiples in our view, and hence why I think we can get into it, why REA is looking to use their script and try not to pay too much in the way in cash on a bid, because they know potentially that their equity could be overvalued, or at least very attractive to use for a deal on their behalf. But for Rightmove more specifically, very similar dynamics compared to realestate.com, the number one portal by a country mile. They don't have to pay the Google tax, which is they don't have to be paying Google to attract traffic. It all comes direct to website. So it's a very hard model to disintermediate, and because they're not paying those costs off to Google and others, their margins have historically been around the 70% mark, which is just rude in terms of profitability. But the issue for Rightmove is that the agent numbers have been quite static, and the margins, you say, they're already enhanced. So where is your top line growth coming from? Traditionally, it had come from them upselling agents into higher modules, if you like. So, basically saying if you want to be on the front page, you got to pay a few bucks extra. If you want to feature a property, you got to pay a few bucks extra. And so the top line was really growing fairly modestly, kind of that high single digit number. So you could almost think of it as an equity bond in some ways. It's going to give you a decent cash return. It was trading on some periods there, sort of 20 times earnings, so call it a 5 or 6% cash yield. But it was growing at 10% per annum. So if you could buy it at reasonable valuations, your baseline was pretty well protected. But the other element was that they hadn't really pulled the lever on a lot of the things that had been done around the world by other portals, and REA has done pretty well here. But things like the leasing market, the ability to generate leads for mortgages, some of the auxiliary stuff, which they really hadn't really done a fantastic job on. The old CEO, Peter, was a terrific guy, but it really was a sense here that with some new blood, there could be some ability to reduce the gulf, I guess, on those auxiliary services. And that's exactly what happened. We had Johan come into the business recently and put a fairly positive but achievable plan in place for how the top line was going to accelerate a little bit. And that's kind of what we were used as the basis for our valuation. We were looking really silly there for a while because the valuation was in the high sevens, and then the stock was before the bid was trading at $5. So it did look like a bit of a silly gap. And what have we got wrong here? But I think that undervaluation has since been realised by the market and by REA, and hence the bid. So that's a bit of a long-winded answer, but I think that realestate.com say, well, they're just following the same playbook we've done over the last 10 years. That looks pretty achievable, and if we can get that asset on a cheap price, then that probably makes a lot of sense.
And so, Nick, was the takeover ever part of your thesis when you were thinking about this investment?
We don't generally buy things for takeovers. It's a nice thing that happens from time to time because, good things happen to cheap, high-quality assets. Either they go up on their own because people want to buy more shares, or strategic buyers coming in, private equity, other listed comps come in and sort of realise that value on your behalf. So we've had a number of takeovers over the years, but it's definitely not our baseline. We want to make sure that we can make money without an acquisition. But yeah, it's always a nice thing as long as the price is appropriate. You don't want to give away assets for free either. Yeah.
So let's turn to the proposed takeover. We're interested to get your view on it. On one hand, REA have a great management team and a great history of executing. On the other hand, Australian businesses don't have a great track record of going to Britain. And as you mentioned earlier, if it's mainly scrip, potentially you're trading your shares in Rightmove for overvalued shares in REA. So, how are you thinking about the proposed takeover, and I guess how likely do you think it is that it happens?
Yeah, you're absolutely right. Aussie businesses have got a horrific track record of going anywhere outside of Australia, so you've got to really take that with a grain of salt. Unfortunately, we export all sorts of great things, but M&A generally is not one of them. But it's a bit of a challenge. I mean, they're looking at dual listing to try and get around the idea that there's a whole bunch of Britons that don't want Aussie script, and especially if you're an index or a passive holder of some sort, that just won't work at all. And then you're right, and we're looking at the PE arbitrage. How attractive is that combined entity with the multiple that REA is commanding at the moment, and the lesser amount provided in cash? I think of the deal in its current form, the board was right to reject it. But if that number was kind of up towards $8, then you'd have to consider it at that point. If there was a larger cash component to it, maybe something more like 60-40, 60% cash, 40% script. But the issue there, of course, is how much debt REA wants to take on. So a deal at the moment, I think it comes out at 2.5 times net debt to EBITDA, which is very manageable for a business like REA, to be honest. If it was a private equity deal, especially back in the day when you could get these kind of multiples, they wouldn't be shy of taking this asset to sort of 5 or 6 times levered. So it really sort of depends on the appetite by REA to lever up their balance sheet or issue some of their own script just to raise some cash to sweeten the deal. But either way, we'll kind of have to see what that looks like over the coming month or so.
Are there any other portals around the world that you have your eye on that you might want to draw our attention to as well?
Sure. I mean, our biggest position. It's no secret. I definitely wouldn't be telling you anything we're doing due diligence on. But one of the biggest positions in our fund is Scout24, which is the German equivalent. So a lot of people know the Swedish business Hennet, and a lot of sort of global managers own that. We've owned that from time to time, but it's incredibly expensive at this point. But Scout24, a German equivalent, growing at earnings at 15% per annum, is currently trading on 23 times earnings, which is, I think, is about half the multiple of REA at the moment. So we think that's pretty interesting. But the other thing everyone should keep an eye on is the actions of CoStar.
Okay.
For those that aren't familiar, business that's run out of the US, managed by a guy called Andy Florence, who was the founder of the business. I can't quite work him out because it looks like he sold down all his equity, but he still runs it like a maniac. But essentially, he's trying to disrupt the American business, and so he's going up against Zillow, where things are a little bit easier because you've got what's called the local MLS system, which is a ability to get a toehold into the market by buying inventory, so you don't have that sort of network effect problem to kind of break into. But he's also bought the number 3 competitor in the UK and doing a reasonable job of moving them into the number 2 position. So hence why the shares in Rightmove had been under some pressure and before this bid. And that's definitely something for investors to keep in mind and keep an eye on, because CoStar, whilst it's a big ask to disrupt the market, they aren't shy. So they'll spend a lot of money to give it a crack, and definitely something worth keeping an eye on for these global property portals in general, and see if that little lesson that I mentioned at the beginning, that they haven't been disrupted yet, but you never say never. So we'll keep an eye on CoStar too.
Love it. Well, thank you so much, Nick. Ren and I both love talking to you and the team from Fairlight. It constantly amazes us the breadth and depth of knowledge you have on industries globally. So we always get some insight on companies we've never heard of before. So absolutely appreciate you coming on. That was great. Thank you.
Always a pleasure catching up with you guys, and looking forward to the next time.
Equity mind.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful